Hey, Smarties. Good morning. I feel like we just did this. Fancy seeing you all here, huh? Oh my gosh, what a night. What a night. We will get into all of that shortly. Welcome. Welcome. Thank you so much for joining the Carrie Show here at Bank Smart Studio. My name is Carrie Ann Cormier, and I am your host and aforementioned name founder of the Carrie Show. For all the people who said this isn't the Carrie Show, it sure is, friends. Yes. A little bit about me. I'm a financial services executive by trade, and my background is in retail banking. Although many times my heart is in marketing and social media, I'm a self-proclaimed smarty pants and total nerd with that stuff. And most days I feel like a digital banking girl in a passbook savings world, but I absolutely love it and am currently taking a sabbatical. I'm on pause from corporate life and taking the freedom and energy and excitement to explore all of the passion projects that have been on pause for the last couple years. One of them being Bank Smart Studio. So we do this every Tuesday and Thursday morning at 10 o'clock right now, and are trying to squeeze in night shift shows whenever we can. We've done two so far, one of them being last night, and it's just so great to have you. Yeah, thank you so much for joining. Drop it in the chat where you're tuning in from. I would love talking with bankers all over the US, and it's so fun. So we have a couple things to chat about today. I am first going to post on Facebook and Twitter that we're live, because again, my little streaming tools haven't quite synced up yet. I do think, I hate to admit this, I think I might, maybe in a month or so, pay for X Premium. I'm probably going to do it. I don't want to, but something about me tells me that it would be valuable to automatically stream over there as well. And you need to have X Premium to do that. So we'll see. But for right now, we'll just double post. Double post, which is something you never want to do in banking. Never, never, never. Never double post. Cool. So let me just move my screens around so I can see all of you really well. And put this one to the right and put this one here. Awesome. Awesome. How's everyone doing this morning? How are our sales goals? Let's check in on our sales goals. So it is, oh my goodness, it is March 10th. We only have a couple weeks left in the quarter. How are our business development calls going? Have we done our soft calls, our hard calls, our networking events? What have we checked off the list? I need to know. What's in the pipeline? Do we have any loan apps? Any referrals to merchant services, investment, commercial lending? Are we a commercial lender? What does our book look like? Have we gotten any deposits with it? Or are we just going with the loan? I need to know what everyone's status is right now. We only have a couple weeks left. All right, let's chop. Oh man, we had so much fun last night. I'm still like riding that high, and I reflected on a little bit, and I want to go back and put a couple footnotes to some of the stories because I think it bears sharing. So the first one, in last night's show, I said I wasn't going to do any visuals. Everything I talked about had like a lesson tied to it. I do have one story that I'm going to share that doesn't quite have a lesson. It's more of a rant. So if you missed it, go back and watch our Women in Banking episode last night in honor of International Women's Day and Women's History Month. I talked about all the lessons that you don't have a playbook for as a woman in banking, and you have to learn the hard way. And we got really deep and really sassy and poured all the tea. But I feel like they all had and were rooted in really good lessons that are helpful and translate not only to banking, but other spots in the business world. And I have one more, and it was, let me figure out what time of my life it was. I'm going to search in here, Miami. Welcome to Miami. Bienvenido a Miami. Okay, so this was 2017. So 9 years ago. I'm gonna pull this up. I was asked to speak at a conference in Miami, and the conference was called Bank Social, and I believe, if I'm correct, there was only one of them ever. I don't know if they ended up doing a second one, but it was actually like a really good conference, and I loved the intent behind it, and it was really about like social media and marketing and community engagement, and it was just I thought it was so good. There was definitely, opportunities to improve being the first one, but I found it really interesting, and not just because I spoke at it, but they had a lot of good intent there. So let me see if I can find this screenshot. Oh no, where is it? Can I drop it on my screen? 596. Let's see if search it. Oh, it says it's on my desktop. Oh, I wonder if it's not an oh, do I need a PNG? Okay, let's see. Let's try this again. I'll open it and see if I can do it that way. Boop. I wonder if it needs to, but no, but other things I have are a screenshot. Technical difficulties. Working through this. If not, we can figure out a different way. Image file. Oh, I could probably share my screen. Oh, here it is. Here it is. Open. Okay. And we'll add it to stage. So, and I want to preface it by saying that this story involves the conference, Bank Social itself, and social media aggregation platform Hootsuite, who are dear friends of mine. And none of the story is actually about them. They are just the setting for this story, but it bears showing this graphic and the context around it. So I'm at the conference. I was invited to this executive dinner. And oh, hold on. You know what I'm going to do? I'm going to make this so you guys can see me a little better. I learned how to do this the other day. All right, ready? We're just going to try it for fun. Yeah, there we go. Okay, cool. Instead of like creeping on little Carrie. All right. So I'm invited to this executive dinner, and if you watched my show last night, you remember we talked about no second locations. I would like to clarify that this does not count as a second location because it was a conference sponsored event. It was a safe space. So we go to this beautiful steakhouse. I believe we were eating like partially outdoors. It was such a beautiful night. I met people from all over the country, bankers, different vendors. It was a rather intimate setting. There was probably about maybe 20 people at the table. Two of them were colleagues of mine. One was a female colleague who was sitting next to me, about my age. One was a male colleague who was about 20 years older than me, and he's sitting down the end of the table with some other people. And so me and my female colleague were making conversation with people sitting around us. We were speakers at the event, so there were a lot of people that wanted to talk to us about our presentation and stuff like that. So this knucklehead, who we will refer to as a knucklehead, he is an executive or owner or something at I'll say large because they're well known, financial services marketing firm. So they're a marketing firm that many institutions use, and I believe he's the founder or something like that. And they focus primarily on financial services and help them branding and all that. And so he's like talking to me like I'm his, and now he's not old. He's probably 15, 20 years older than me. Again, probably the same age as my male colleague that was with us. And he starts talking about like, oh, wouldn't it be great? Maybe if you work really hard, someday you can be an executive like so-and-so down there, pointing to my male colleague. And I'm looking at him. And now if you know anything about Carrie in 2017, she dressed well. She dressed the part. All right. She did not shy away from conversations. She was outgoing. She was professional. And I look at him. Now look at this, look at this. Look at the picture here. We are at an executive dinner. What do the words executive dinner mean to you? It's a dinner, one would think, for executives. Yeah, yeah, great. And this man says to me, maybe one day if you work real hard, you can be an executive just like him. And I go, excuse me, sir. What leads you to believe I'm not an executive? Oh, like couldn't get out of there fast enough. He was like dumbfounded. And I was just like, that was one of the moments, and that stuck with me. And I talked about it on my walk home back to the hotel. And I was like, I can't believe him. And I can tell you that I will never do business with that firm. I mean, the chances of me doing business with them initially were probably slim because, in my opinion, their branding's not that great. However, I will keep those opinions to myself and just talk about the fact that that was such like a disgusting chauvinistic thing to say to like a young female at an executive dinner. So let's do the math. How old would I have been? 33. Oh, no, well, I would have been 32 because I would have been before my birthday. Okay, so just because I'm an executive at the age of 32 and I was presenting here at this conference and you didn't know that, but you're sitting next to me at an executive dinner and you have the nerve and I go, "Oh my gosh. Oh my gosh." Yes, of course. What do you think I am? His secretary? That just gross. And like that stuck with me and I always it always like bothered me. And I hope that my comeback was good enough, because it definitely caught him up and he had nothing to say and avoided the conversation from there. Um, but I'm like, dude, I'm on the same level. Just because this man is older than me does not mean that someday I aspire to be him. No, thank you. So I wanted to share that because that was it doesn't really have a lesson. It's more of a rant. Um, Removed from studio and just about like how that oh, I'm looking at this. How do I do this? There we go. Okay. Just about like the things people encounter. And I wonder if like it was flipped and he was talking with a 32-year-old male, dressed nicely, speaking at the conference with an older female colleague, if he would have said the same things. And I don't believe so. But it was gross. And for someone who could have had plenty of things to talk about, especially in the marketing branding world, and you chose that, that is not a way to get clients. I'm sorry. Yeah, so that was one we didn't talk about last night, but it really didn't have a lesson. So it didn't come up and we had plenty to talk about last night. I also do want to add a footnote to a couple things that I said, and it bears building upon. So you could tell during last night's chat that I started to get a little activated and transporting back in time to conversations I had had in boardrooms, like I was still there and like it was happening right in that moment. And although it's so many years have passed, some of it, when you start talking about it, you get so activated because you're like, I want to make this better. I wanted that moment to be better. I wanted to be more collaborative, and all of that. So I did talk a little bit about a CMO that I had some tiffs with, and I think I used the word hate. And when I say that, I mean I hated it in that moment. Um, and I definitely feel like it came out too strong in the video last night because I want to bring up a interesting point, and I've thought about this a lot over my time since like meeting her originally. And I hated what was happening in the moment, and I hated the way it made me feel. And there's this quote, I'm gonna try to pull it up so I can look at it. It's from a hold on. Where did my screen go? Oh yeah, here we go. Here we go. Here we go. It's from a Swiss psychiatrist, Carl Jung, and he says something to the effect of everything that irritates us about others can lead us to an understanding of ourselves. And I think that is really important to share here. And I came across this a couple years ago, and it really made me think of reasons that I get like activated in certain situations like that. And um I want to build upon that because I think it's really important. So the theory is, right, that if someone bothers you, it's usually because they're reflecting back to you either a trait or something you dislike in yourself or something that you wish you had the courage to express. And as I've reflected on this, she definitely had qualities that I was envious of and wish I had the same skill set. In my mind, I'm very much of a strategist. I'm an idea person and I can execute on those ideas. Um, but all of that is very weighing. It's hard to do all of it at the same time. So at times, things have to fall, right? And I always envied something that she was really good at was staying above the noise in her team. And what I mean by that is she was very much a task oriented, like project manager mindset, and could lead a team in a way that focused on deliverables and output. So it was kind of like cranking out of a machine, right? Something comes in, we put it on the task list, we update it on our biweekly pipeline meetings, morning meetings, whatever she did, and we get it done. And never really seemed to, at least, get involved in the minutia of the marketing, the underlying strategy, the design, the look, the content, the wordsmithing. And that's something that I get hyper focused on. And at times that's a detriment to me. And sometimes it's hard for me to see that. And in my career, I found myself hyper fixating on things like that. And even like, coordinators on my team will tell you that they'll design a graphic or design words, and I don't necessarily tear it up, but I always have some changes, some edits, because things need to be a little bit more centered or the font needs to be a little bit different. And I can't always, sometimes I can, because I realize sometimes that getting at 75% is better than taking longer and getting to 100. So over the years I've been willing to, for the sake of speed and time to market, because I understand how important that is, I can get to 75% instead of analysis paralysis and be perfect. I definitely, that is not me, but I envy someone like her who can be so task oriented and manage a pipeline like that without getting into the noise. And as I look back at some of those moments, do I wish that she had taken accountability for certain things? Do I wish she had a softer approach? Absolutely. Absolutely. But I think what I wish more is that some of the traits that she had, I could have absorbed and learned from. And perhaps vice versa, that I had skills that I could have helped her fine tune within herself. So I feel like everyone you come across, whether it's in like a positive light or it's in more of a struggle, there's always a lesson there. And I really liked this quote about understanding um, what we see in others and what irritates us can really be a reflection of ourselves. So I just wanted to share that. I hope it's helpful. And think of that next time you're in a little bit of a tizzy. I definitely have thought of it quite over the years. There's been other people that I'm like, "Oh my gosh," and I'm like, "Why do they irritate me?" Oh, because they're more outgoing than me. They don't appear to have the same, like, social anxiety that I do. They can work a room like there's no tomorrow, and do I know what's going on in their brain? No. Do I know if they have to, like, pump themselves up or have a good cry in the car before they go do a networking event? I don't know. Um, but all I see is the outer layer of like, "Oh my gosh, I wish I could, you know, introduce myself at a table like that or walk around and just say hi to people," and, um, so there's always something there, and I hope you can reflect on it when the time comes. Uh, cool. So, as we're watching the show, be sure to like and subscribe. That is how we keep the studio running. So if you haven't already, like th- the Carrie show on YouTube. It's at Bank Smart Carrie, and be sure to subscribe. It keeps the studio running. And of course, you can find us on all the socials, at Bank Smart Studio and at Bank Smart Carrie. I have my Bank Smart Carry sweatshirt on. This might be my uniform going forward for at least this foreseeable future till I get another one that I like. So we're gonna do a little bit of around the web. So around the web is news, current events, topics, things that I'm seeing online that bear repeating or highlighting or diving into a little bit further. And the first one is about ICBA Live that happened this week. So, ICBA Live is hosted by the Independent Community Bankers Association. It was held this week, March 6th through the 9th in San Diego. And it appeared to be everyone who's everyone in community banking was there. Super cool, super cool. I had to do a little bit more digging about it because I've never actually been. And it's something that I think would be on my bucket list, because it has this, like, and I guess it's in the name, this community feel, right? It doesn't appear to be such like a giant conference like a Financial Brand or Money 2020 where it's everyone who's everyone of everything, right? This feels like the downtown, hometown community bankers, and I could be wrong, but, like, from different, what's the word? Like a wide range of professionals from community banks. So like from CEOs to maybe managers, strategists, vice presidents, like C-suite, everyone in between, emerging leaders, directors. It just feels like a great mix. And I took a look at the site and it showed like a breakdown of what type of banks were there. And the sweet spot was really 100 million to 1 billion made up 75% of the attendees. So if your community bank is in the 100 million to 1 billion, these were your peers. And I think that was really cool because it tells you like there's lots to talk about in that area and people want to kind of like band together and have those conversations. My friend Blonde Banker was there and I was like following her stories on Instagram and I love it. I wanted to be there. Maybe I just wanted to go to San Diego. It's on my bucket list. I've never been. That in San Fran. Actually, California in general, let's be real. But I looked at, so they had some like keynote speakers, all that, but they had a bunch of learning labs, is what they called them. They were like 40 minutes to about an hour long workshops that dove into specific topics. And I looked at the topic list and it was very interesting. So there, I counted them. There were 59 breakout learning labs. And what do you think was the most talked about topic? Throw it in the chat. Nope. AI. What? Yep, I bet we could have guessed that one. 10 out of the 59 sessions talked about AI, which is about 17%. No surprise there. AI was themes in all sorts of things from like talking about like automation to marketing, to gaining efficiencies, to AI agents and how you interact and how it makes the customer experience. Um, no surprise there, and we'll continue to see that as a topic. We're not going to build upon that right now. I think we've talked AI for the last couple episodes, so we're going to take a break and we have something more interesting to talk about. And it's actually one of the topics because I see it as like an emerging trend. The next one, there were 8 that talked about deposits. So deposits are still a hot topic, how to acquire deposits, how to manage your deposits and your liquidity when you have them. Unique ways of marketing automation to get members through your pipeline to retain and acquire new deposits. 3 sessions, no, 3 topics that had about 5 sessions each that talked about the first one that was interesting, and I feel like this is on the rise, is succession planning. So everyone wants to know what happens when your old white CEO retires. Oh, what? I'm sorry. Erase. When your CEO of whatever nationality or ethnicity or gender happens to retire, what do you do? What does the bench look like? Do you have people to step up, not just to that role, but to the roles beneath it? Are you looking, does it involve internal search, external search, etc.? What I didn't see, and I should just double check this, I didn't see anything on M&A. Let me quickly, let's quickly look that up because now that I said that, ICBA Live 2026. Now that I said that, I wonder if I missed it because that's an interesting, and it's something that goes into succession planning most often. When someone's retiring, is this a time for looking for a merger partner or the opportunity to be acquired? Let's see. Open this a little bit. Search. Find. How do I see? The problem is I'm going to move over to Safari. I know how to do it in Safari. Sometimes it's not so easy. I'm still learning like MacBook life. I've gotten really good at it. But there are still some things that just don't like jump out at me. I just did this. Oh, here we go. I was under edit. Whoops. Find. Merger. Let's search the word merger. Okay. I see one session. Okay, one session out of 59. That's interesting. And now let me see if that overlapped, if it had the topic of succession planning in it. Because that would... No, it didn't. So there was I mean, you don't need like 10 sessions about M&A, but I would have thought it would have been a bigger topic in the succession planning one. So that's very interesting. We're going to note that down in the studio notes. The other topic, so let me pull up the topics again. So we said that there were 5 topics about succession planning, 5 about digital, which I would have thought would have been more. The digital trend topic may be saturated, talking about digital transformation, talking about the digital customer. That wasn't very much of a focus. It was about there was a couple about, mobile first, digital like marketing to appeal to that demographic, etc. But it didn't seem to be as front and center as I would have expected. The other one, there was 5 topics on compliance, balancing risk, different compliance questions, being able to talk to regulators, I think, which was really cool. Um, there was, like a risk track, so that had the compliance stuff under it. 4 were about cybersecurity and IT. Which did fall mostly under the risk track. That was interesting. A lot of them kind of blurred in with the AI, like what's the risks and security concerns around AI? What do we have to think about? That kind of stuff, which no surprise there. And this one is very exciting to me, and I don't think there's enough talk about it. Um, is stablecoins. There were 3 sessions that talked about stablecoins and what people need to know about them, and it's so funny because, being at an organization full time, just about, like, maybe 10 months ago, no one talked about stablecoins, and now I don't think that that's necessarily an indication of the industry. I think it's an indication of, organizations sticking the head in the sand and pretending like these things aren't happening. I remember being in a conversation again. I had a digital person on my team who was so good at just sharing like trends and just upcoming things in a way that was digestible to the frontline teams. Just not that they were going to talk to branches and members about like crypto or open banking, right? But that they would know the themes and things that are emerging trends. So when it starts to become a hot topic, you're not teaching them everything from the start, right? So he had written a blog article, and I think part of it was for internal distribution, and then there was a version for external distribution. So it was talking a little bit more about open banking. And this is so sad. Someone in a higher position, let's just say hypothetically, um, who's in charge of like digital operations says, yeah, we're not ready to talk about open banking. We're not talking about that. We don't do open banking. And I'm like, excuse me? That tells me you don't know what open banking is. Because a lot of the things our members interact with involve open banking, and they don't know it. A lot of the things that you interact with involve open banking, and you don't know. Um, and so it was just and like, what's the harm, right, in sharing something in like a easily digestible way with team members that provides them knowledge? Riddle me that. Um, I'll give you an example. So for those of you who don't have I'm gonna really dumb this down, um, because again, this is not my forte, it's his. The concept of open banking kind of, goes into the premise of you owning your own financial data, not necessarily the bank. But there are ways for with current banking apps, right? You give permission for your apps to connect to other bank apps and such. So like let me give you an example. Sometimes when you're paying, right, a bill, it lets you log in with a verification like through Plaid, and you can um authenticate your bank account with your credentials. It like connects it, and then you can just make the payment, or you can see the transaction. um what's another one you see it with, like Intuit, when you do like TurboTax, you can log in with that. So that's kind of like a very broad concept about it, but it gives permission for apps to connect to your bank account so that they can see your financial data or initiate payments. Um, so for someone at a VP or higher, perhaps level, to say we don't do open banking and our members don't do open banking, and we can't talk about open banking? God forbid you bring up a stable coin. Whew. The pitchforks might come out. Can't afford the pitchforks to come out. So it's just like, if I'm too much for you, go find less. And you sure have found it, haven't you? It's just okay, erase, being sassy. So bringing it back to the stablecoin topic, there were 3 ICBA sessions on it, and let's just do like a quick down and dirty on stablecoin. How does that sound? I think that's fun. I'd love to do a deeper dive session. Um, and admittedly, there's so much that I need to learn. It happens so fast, but we're just going to give like a quick overview. If you haven't started having these conversations at your organization, or you've heard about them, or there's been some talk about them, but you don't quite understand what it means, I'm going to give like a really broad, like high level recap. So, if you think stable coins, right, are just like a crypto broke problem, you're probably missing the bigger story here, which is the internet. It's building its own financial system. And the question is for community banks is not really should we issue stable coins? It's how do we stay relevant if money moves faster and cheaper somewhere else? So if the internet is building its own financial system, right, banks have typically relied on being the entryway and the exitway and the rails for money movement. And this is one of those moments where banking leaders can either ignore the technology, right, or start thinking about how their institution fits into the next version of the payment system. Make sense? So stablecoins are basically like digital dollars that are live on blockchain networks. So unlike Bitcoin, right, which jumps around, is very volatile, stablecoins are designed to stay at a dollar for dollar ratio because they're backed by real assets. And these are usually things like treasury bills or cash reserves. And their primary goal is speed. So they're usually mostly for like payments and moving money quickly online because they settle in seconds instead of days. Game changer. So instead of waiting for ACH, right, or paying wire fees, ACH can take 2 to 3 days. Wire fees, I see them anywhere between like $20 to $50. Stable coins can move value 24 hours a day, 7 days a week, anywhere in the world. Which is why fintech companies and payment companies are paying very close attention. And regulators and banks, they're starting to pay attention as well. And that makes sense why this was a topic that dove into stablecoins and regulations at ICBA. A couple things to note. I'm just going to move over because I have a resource I want to show you guys. That's not it. Okay, before I show you the resource, it's going to be a really good one. So, a couple examples. I'm just going to do some more highlights. A couple examples of stablecoins are like USDC, Tether, DAI. Look those up. Those are some examples of stablecoins. It lives on the internet instead of on a bank core. Weird, huh? It makes, like, when you talk about like cross-border payments, it makes it super cheap, super fast. And the cool thing about it, and this is where it, when you talk about like making things faster, cheaper, easier, quicker with automation, payments can be automated with code. So the programmability of it, think like escrow, instant payouts, automated settlements, global payroll, things that can just be automated and not have to have all these manual processes or hands on it. Like, So cool. And that's a reason why like fintechs and other payment companies are so excited about it. Um, when you when you talk about like why community banks should be thinking about this and what makes them a little bit nervous, um, part of it is deposits, right? The thought is that stable coins don't sit on the core, although they are backed by real assets. So if a deposit from a customer or member leaves to a stable coin, the bank or credit union loses it. However, there could be an opportunity for them to hold the cash reserves. So think about like, trying to think of an example. What did we did like, oh my gosh, we did this with payment processing. Yeah, like holding the reserve account, um, or like the settlement accounts. Um, there's an opportunity there. However, it could impact your bank or credit's payment revenue. So think about less interchange, less wire income, less ACH income, and having payments because they're moving outside of the traditional bank rails. The thing that is still an opportunity is currently and most of the time, there still needs to be an on and off ramp. So, how do you convert a physical dollar into a digital dollar? You need an entry and an exit point, and typically that is a traditional bank or credit union. Um, so, I'm going to bring up this really cool let's see, this really cool resource I found that I think would be helpful for a lot of you if you're dabbling or want to learn more. Share screen. Okay. Add to stage. Boop. Okay. So this is the website for the National Cryptocurrency Association. I'm going to drop it in the chat. Going over here. I don't want to like exit out my stream service. Okay. Post a comment. Okay, dropping that in the chat. So there's the link to their website. They have some free courses you can take that talk about like, learn the basics with Crypto 101. They have podcasts, they have courses, crypto for business, online safety. Look at this. So good. So good. Articles. Let's look at the podcast. What's on the pod? Yeah, there we go. Explaining Stablecoins 101. Check that one out. I have not yet, but it looks like it'll be interesting. So it says Stablecoins 101, the digital dollar is quickly reshaping the financial system. So they are a great resource. And the ABCs of NFTs, tokenizing real estate, staying safe online. This looks like a great resource for your team to get started. So if you're in a community bank or credit union, any level, right? Like any level, you do not have to be a digital person to check this out. Like be in charge of your own training and your own learning. These courses are free and it's something you can use to start conversations with your team. If you're in a leadership role, it would be cool to like share or assign these out. They look very interesting. I'm going to try to take some and report back because I think it's really helpful, and if they're really boring and crappy, I don't wanna, like, brag about them, but, because we all know, like, I don't wanna, like, rag on, like, bank training LMS platforms, but you know all of your regulatory compliance training that you just like, "Next, next, next, next. Oh, I have it up on the screen. Okay, I'm gonna minimize it, but it's still playing so that I can just get some stuff done, and then next, next. Oh, look, I got 100% on their certificate. Yay!" Um, there's only so many times you can take a Reg CC training, fair lending. um, but these are things you want to pay attention to. They're interesting, they're forward thinking, and they're going to impact how we do business. So check it out. Tell me what you think if you like it. I'm also interested. So we talked. Did we finish what we had to say about stablecoins? Yeah. I'm interested if you did go to ICBA Live, let me know what you think. What was your favorite session? There looked like there were so many good ones, and there was one that I actually was so intrigued by. I'm gonna see if I should have like clipped the name of the workshop, but it was let's see, let me see, find it. I was like, here we go. Ready? And this is an interesting way to start. The devil's in the details. Metrics for credit and operational intelligence. Behind every credit or operations team is a set of often overlooked metrics telling a powerful story. Drawing on real world trends across community and regional banks, this session will examine how indicators like exception percentages, collateral and policy exceptions, risk ratings, distribution, loan maintenance activity reveal deeper insights into operational discipline and credit health. Whether you're preparing for acquisition or planning to scale independently, this session will equip you with sharper understanding of the KPIs to drive sustained success and how to benchmark your institution accordingly. So I read most of that being like on the loan side, right? Credit, loan exceptions, your portfolio, stuff like that. But it makes me think, and that's a little dangerous, about metrics for when it says operational, right? How many times are you at an organization and the retail team is slapped up and down, marketing slapped up and down, metrics, KPIs, dashboards, benchmarks, like all of that, and the lending team as well. Where do we see those from the back office? I would love that. And back office, I mean like your operations team, specifically in like deposit ops, electronic services. I would love to see it in IT, like help desk tickets, um, themes, stuff like that. We don't get enough metrics and reporting in themes from those back office teams. And if you're an organization that does produce that, like, bravo, because that is a differentiator. And if you're a leader of one of those teams or a team member of one of those teams that doesn't do that, I highly recommend adding it. Like, you could be a game changer. You could like make your team shine if you did that. Like, because there are at least people like me craving that kind of data from back office teams. You know, what are the themes that we're seeing? What's the SLA on a ticket? All of that. And we focus so much on the sales metrics, but there's a lot of stories to be told in the operational metrics and not just on the credit and loan side. So something to think about. Yeah. Shout out to the replay crew. Thanks to everyone who is listening, not live, but on their way home in the afternoon, on their ride to work in the morning, in the gym, powering through, maybe relaxing, maybe drying your hair and doing your makeup. Thank you so much. I do go back and read all the comments. And so throw them in the chat. Someone did tell me that they can't see the comments when they replay. They can't see the ones that were live. And that's like super interesting to me. I got to figure that out because I could see them, but they're not there for other people. So I don't know if it's like a stream thing or a setting that I'm not doing right. But I'll figure that out. Yeah? Yeah. What else is going on? I got a couple things. Just taking a little breather. So this one, we are going to talk about the financial brand. Good friends of mine. I love the website, the articles. One of them piqued my interest this morning, and not because it's necessarily a new topic, but because it's the aforementioned beating a dead horse. And I don't mean that any shade to them. What's the like progressive way of saying beating a dead horse? How do you like, what's the friendly way? Banging your head against a brick wall? That doesn't seem. Going over old ground. There we go. We don't want to beat dead horses. Going over old ground. So this isn't any shade to them, because it's definitely a topic that I'll say specifically credit unions struggle with. Banks struggle with it in a different way, I think. But the topic is, and the headline, why most indirect borrowers will never do any more business with you and how to fix that. Should we pull the article up? I'll do that. We'll pull the article up. Let's see. Share screen. Why indirect borrowers? And this is a recent article within the last couple days or so. And I'll add it to stage. And let me see if I can get me a little close. There we go. Okay. So you don't necessarily have to read this, but it's going to be up. We're going to follow along. So, why most indirect borrowers will never do any more business with you and how to fix that. So this it has some interesting statistics, and this is the age-old question. And I saw this in the community banking side, specifically with mortgage-only customers. So, and it comes in cycles. Every couple of years, someone thinks they're going to be the sales hero, and we're going to focus on mortgage-only customers, and we're going to cross-sell them. And the thought is, well, if we do a warm handoff between the mortgage originator and the branch person, we're going to get an account. I'm like, no, no, it needs to be part of their package. But who wants to listen to me? Then it's like, well, we'll just include a brochure in their closing packet. No, no, a brochure is not going to close the business. And neither is the warm handoff because or a cold handoff, because no one's going to answer the phone, and it's where cross sell goes to die. Okay. So like a calendar, like clockwork, every couple of years someone comes up with this great idea and they're going to save the world. And you know what? They don't have a clear plan, and they don't have follow through, and they don't have buy-in. Something like this needs to be ingrained in the organization, and everyone needs to be all in, and you have to make it a priority. And so when I see an article like this about indirect lending, it's absolutely an opportunity, right? So here we go. According to True Stage Research, 82% of recent auto loanees worked with the dealership to obtain their credit union. Okay. Fewer than 1 in 20 of those borrowers ever open an account with the institution holding their loan. So they go to the dealership. They likely don't even know who is holding the loan, right? Nor do they care. And then fewer than 1 in 20 of those borrowers ever open an account with the institution. It does say that most are open to hearing more from the lender. That's fair. If someone's giving you money for an auto loan, you're at least open to a discussion or an offer, right? But that doesn't necessarily mean it's going to be successful. So I think this is one of those age-old questions of like, how do you convert these to members? And credit unions seem to play more in the indirect game. Actually, I'm not informed as to why that is. Seems like something both places can do, but I don't know. Guess banks are focused on other things, or perhaps some of um what's the word, like, I don't want to say connectware, but like the processors, maybe they focus more on credit unions. I don't know. But anyway, it seems to be like a credit union thing. And so these are borrowers, they get a loan, no one's mining them. And that's what it says here, that too many institutions don't have a strategy to reach them. So again, if you're in a credit union, every couple of years, someone's here to save the day. They're going to be a sales manager. They're going to be a new head of lending. They're going to be like strategy, whatever it is. And we're going to focus on converting our indirect members. How do you plan on doing that? They have to open a share account to become a member. So they become a member with a what's called like a par value of a share. So you open, like, let's say a $5 savings account, lock it down. Sometimes those accounts are transactional, which means they could continue to use it and add more money to it and conduct transactions. Sometimes those are just a share account and they're locked down. So they would have to open a transactional savings or a transactional checking to be able to actually conduct business. So it depends on what the credit union does. But how come most aren't doing that? Similarly to the mortgage only, how come most aren't doing it successfully? And I think it comes down to making it really ingrained in the organization and a focus. Because although I've never really been deep in trying it, I've watched it pass by my eyes many times on both sides, and everyone thinks they can save the day. So here, there's some like need to know tips. So we're going to read them because I think they're interesting. The strongest performers will lead with value, using dedicated outbound teams, text messaging, immediate digital banking enrollment to build engagement before moving to a sales pitch. And I agree with that. That is like an all-in effort. I remember when I opened my mortgage. So a little side story. Um, I live in a town that had like a local credit union named after the town. And when I went to get my first mortgage, I didn't want to go with the company that I worked for, just because I like wanted to keep that separate. Um, but I go, okay, well, what do I know about mortgages? I guess I'm going to um, message my local credit union. So I email them and I get in touch with the loan officer and I'm like, here's what I'm thinking of. Okay. And they say they don't really like hook the deal. Like they're like, okay, we can help you. Let us know like what you'd like to do for next steps. So it just so happens that in the next step I find a rehab property. So it would be like a construction loan to like rehab um something that needed to be gutted. The purchase price for the property would have been like $50,000 and I probably would have needed 200,000 at the time to renovate it. And so I email her back and I'm like, "Hey, do you do this blah blah?" "Oh, no, we don't. Um Let me refer you to so and so at this other company." It's another bank that's like more North Shore, larger. And I go, "Oh, okay, great. Thank you so much." Makes the introduction. Well, it ends up that I don't go with the construction loan. I end up purchasing a property that does not need to be rehabbed. And where do I get my loan? With the one that they referred me to. One, because she made it so easy. She wanted the business. She was there to serve. And the other place just like, yeah, we're here. We'll pass you off. Not like, and it wasn't even a like, if this doesn't work out, give me a call. We can, compare prices. We can run numbers, whatever. Like this other lender did not seem to want my business from this local credit union. And to be clear, I don't have a relationship with them. I don't have accounts there. This is just my like experience in testing them out because I kind of thought like, oh, I should go with like they have a good reputation in town, right? So I end up with my mortgage there. End up going back to them for a HELOC down the road. But how I got my account was, so at closing, she's like, "Hey, I just want to let you know," and this was the warm handoff. So I don't know if it would have worked anywhere else. Hey, I just want to let you know, someone's going to reach out from our team, and they're gonna, we're gonna pair you with a checking account for your new mortgage. It'll help you make payments, stuff like that. The first time I think they called, I didn't answer. They left a message. They finally got a hold of me, and I was like, "Can I do this online?" And they're like, "Yes." So I ended up doing it online. They offered like a special account for the mortgage holders, which was cool. And maybe it was like it wasn't maybe just like I don't want to say it was like specific to the mortgage holders, but they didn't offer me a rack account. It was more of like one of their electronic products. So they may have done like a what is it called? Like a direct bank like version of their brand. Do you know what I'm saying? You know what I'm getting at? And so it was one of those ones that had like a really good interest rate. It had like rebates on ATM fees. It had I get um credits back for when I swipe my debit card, like 5 cents a swipe, whatever. It's a good account. And I started using it. And so I started initially using it for just to pay my mortgage out of. So I'd have direct deposit go in there and then I'd pay my mortgage out of it. But then like I started to build up a little surplus and I started using it my debit card more and with swipes, and then I started making payments out of it. And now it's like I wouldn't say it's my primary checking, but it very well could be, and I could make it my primary checking. I use it a lot. Um, and so that was a great way to like get me. But they do a good job about follow through. And it wasn't just one touch point, it was multiple touch points. Um, I do think had they done it at closing, a little more of a like, oh, sign here for your deposit account, we'll get up and running, someone will call you with your number, that kind of thing. That could have hooked me in a little bit more, but I thought they did a really good job with that. And I think they're known for that too. So then I end up getting my HELOC there. I have a savings account. Like it's just the whole package. And I feel really good about it and I like them. Here, the article talks about one credit union converted 13% of indirect borrowers into multi-product relationships using structured onboarding and personalized cross-sell campaigns, roughly 2 to 3 times the industry baseline. I think that's so cool. It's hard to do. But again, like if you read the article, it talks a little bit about like their all-in approach and how they make it happen. It takes a concerted effort from all teams. And this is a good point here. The real measure of success is a behavioral migration. The second account opened is a starting point, but earning the role of primary financial institution is where long-term value lives. So like I just said, my other bank account, it started as a starting point, but has earned pretty much the role of primary financial institution. Although I don't consider it like you wouldn't know it wasn't my primary financial institution, the amount I like move through it. Um, yeah, yeah. But you can't be everything to everyone. And so whether you're a bank, whether you're a credit union, whether you're focusing on indirect borrowers or mortgage only customers, you need to laser focus. This isn't just a fly by night idea. This isn't just the idea someone picks up every other year. You need to like hone in and focus on it. So check out this article. There might be some good tips and tricks in there. I found it helpful, kind of what it talked about, just about the state of the industry. And so if you're proposing something like this at your organization, it can give you some background data as a baseline. So if nothing else, it's got some good baseline data in there. So check it out. Whoever, what's the word, breaks that nut will be really successful. It's a difficult one. We're switching glasses. These are our sassy glasses. I'm just like reflecting on all the times that someone feels like they're going to come in and change the world. I know how that feels. I do it like operationally and on the retail side, but never campaigned myself as a sales leader, but I do know what it feels like to try to start up and run a campaign like this. And you have to get the buy-in. It has to be top to bottom, inside and out. Everyone needs to be on board. And yeah, it's consistency, right? You're not going to see results in the first 3 months, but staying at it and staying consistent, I think is so important. So yeah, cool. So I have a couple more just tiny tidbits. This one I want to share. So we're going to pull this up on the screen too. For my Massachusetts peeps, I came across this and it's so cool and so worth sharing. Let me see if I can pull it up. Stop, present, image. I like talking this through. Okay. This is as big as I can get it. And I'll drop the link again. So this is coming from the Office of Economic Empowerment. They are looking for community ambassadors from specific cities and towns in Massachusetts. And there's an opportunity to earn a stipend of up to $3,000. And I'm going to send you the link. Community And I think it's such a cool thing for financial institutions, and especially if you're maybe looking for some like CRA credit, or it's just something you want to do on your own. Um, so they're looking for leaders who help raise awareness of the Office of Economic Empowerment's financial education and wealth building programs. Through outreach, partnership, and local engagement, ambassadors connect residents to free tools and resources to support everyday financial decisions. Hold on. And long-term planning. So you go through a training, you get free resources, you participate in some outreach events, and you help increase in the visibility of this financial education and opportunities for the community. You do not need a financial background. However, if you do, oh my goodness, that is prime. And now I'll tell you what the catch is. It's open to a few select communities. Okay, I have that up on the screen. Let me find the communities. If you follow the website, it will be there, but we're gonna read them. So this is pretty broad, but you can tell that they are communities that probably target demographics that need this kind of financial literacy. So Boston, Springfield, Worcester, Lowell, Fall River, Everett, Chicopee, Fitchburg, Lynn, Taunton, Quincy. Okay. I'll say it again. Boston, Springfield, Worcester, Lowell, Fall River, Everett, Chicopee, Fitchburg, Lynn, Taunton, and Quincy. So those are like, and again, it's on the if you go to the website, I just dropped a link in the chat, or you can use this graphic. This is really cool. So you can apply. I don't know how many people that they're taking, but it helps individuals from underserved communities with financial education resources. They are looking for those that are bilingual if possible. It's not a requirement. But you could earn a stipend of $3,000 for participation. And I think that is so cool. So whether you're doing it on your own behalf or on behalf of your organization, I think that is so powerful, and you could build a really cool partnership and story around it. So if you're in Massachusetts, this is for you in case you missed it. Definitely something to talk about if you're in those geographic areas. I think that's so super cool. And if you're not in Massachusetts, check out your state's kind of Office of Economic Empowerment, what that looks like. Maybe there's similar programs out there or opportunities to partner. There's so many good things out there when you look for it. I love that. We're going to end with a little affirmation card. So I have these affirmation cards that I got from a colleague, one of my besties. And it was something to bring up when I needed a little reinforcement, when I needed some inspiration. We're going to shuffle them. Shuffle the deck. And I haven't broken them out in a while, but I was cleaning out my desk the other day and actually looking for that article for you guys, and this came up. So, okay, I'm just going to draw one randomly. Okay, this one's called Risks. I'm going to read it to you. I take big risks and leap into the unknown with fearless abandon, knowing that the best surprises and richest experiences come from bold choices. Worst case scenario, the unknown is filled with spiders and they swarm me and eat me and decorate their spider caves with my bones. But what are the chances? So today we take big risks and leap into the unknown with fearless abandon, knowing that the best surprises and richest experience come from bold choices. Sound good? I love that. I think we may make this, we got a whole bunch of cards here. I think we do this again. All right, everyone. Thank you so much for joining the Carrie Show today. Be sure to like and subscribe to the video here and on all of our socials. We're on LinkedIn, Facebook, Instagram, at BankSmart Carrie, at BankSmart Studio. Thank you so much for joining, and stay social, my friends. I hope you have a great day.
Wait, where did she go? Why is this still on? Bye-bye. Don't forget to subscribe to my channel.